What's the number one thing people are talking about in real estate these days?
I don't know. I've seen so much.
Interest rates. And you've got two different camps. You got the camp where they're like, hey, they're below the historical average. It's not that high. And then you have the consumer who's like, bro, it was 2% earlier this year. You're now telling me it's 6%? Like, oh my God. Yeah, it's hard, right? Because we're all worried about the future. And a lot of us future trip, but in this situation, there's alternatives to just going with what the market rate is. So there's several different ways to change how you look at this because there's different programs, right? So there's the 2-1 buy down, which is a temporary buy down of your interest rate for the first 2 years, 2% on the first year, 1% in the second year, and then the note rate at which you locked in prior to those 2 years for the rest of the remaining 28 years. You also have what's called a permanent buy down. So when you've got some extra money or you've got a seller concession, you can buy that interest rate, that 30-year fixed interest rate, down permanently for the life of the loan. And some other people are starting to talk about ARMs or adjustable rate mortgages. I try to tiptoe around this because that has kind of a negative connotation prior to 2007, 2008, when those really bad toxic ARMs were out there. These are totally different, but they do have an advantage for somebody who understands how markets work, indexes, and margins, because the rates can be lower.
Okay.
When you're talking about getting a mortgage to buy a house, right? People are like, well, what if I put more down? Right? And usually it's like 1%, 2%, 3% of the purchase price. They think by putting that extra amount down, it's going to lower their payment. We're talking pennies on the dollar compared to using that same money to buy down the interest rate, because the interest rate has a bigger impact on your payment than how much you borrow. Right. So look at it this way. The rate that you're seeing online and posted by lenders isn't necessarily the rate you have to live with. Think about it from a perspective of payment, right? Love your payment. Don't date the rate, love your payment. Because if you love your payment, you're going to put yourself in a good situation in the home that you're buying. And that payment, right, can be influenced the most with money towards buying the rate down. So in this market, as sellers are willing to give up concessions, instead of asking them to reduce their price, ask them to send over concessions towards your closing costs to help you buy down the rate, whether that's the 2-1 buy down that the seller has to finance, or it's a permanent buy down specifically for you to buy down your rate for the 30 years. Thank you for watching. I hope you enjoyed the content. Make sure you smash that subscribe button following Mortgage Data 3 so that you can get some more helpful information on how to buy a house.